Right. So this is week two. In week two, we're going to focus on trade locations, right? So in the last class, we discussed there are different components to a trade setup. There is trade locations, trading momentum, trading strategy, could be trading range breakouts or anything, indicators, all these things, right? So your trading setup or your trade is actually a combination of various different factors together, right? So far we learned about momentum properly, right? We know about momentum now. We know trading range breakouts, we know breakout validations and all these things, right? And you guys have started trading also a little bit on this. So if you have noticed, one of the common observation that you'll find is that if you were trading the range breakouts, maybe inside candlestick plus ST, or even if it's just a normal IC range itself, right? If you noticed, if the momentum was also in the same direction as yours, if the momentum was bearish and you got a range breakout in the bearish direction, it actually gave a pretty big moves, right? So one of the few observations that you will notice, you may have noticed by now, is that if the market is side trending, right? Like let's say the momentum is like neutral markets, right? So if the stock has been side trending for a while, right? And even if it gives a breakout of this range, it may not move that much, right? So you may notice that, like in the morning market itself, you may notice that some stocks moves up very big in the first 30 minutes. Some stocks just goes a little bit here and there, more like a range bound session, right? So this is all because these can be avoided in the sense, if you filter a stock based on momentum, that is, if a momentum switch has happened, we learned about momentum switch. Let's say this is the last proper green candlestick. Okay, just check out this observation from tomorrow in the market, right? So that is, if a stock has starts reversing its trend, right? If a momentum switch has happened, right? Usually in the next day also, when the morning market happens, these stocks tends to give bigger moves towards the downside, right? Uh, this is just a general observation. That is, a range breakout plus a momentum switch will give higher, bigger movements in the markets, right? So anyway, but even then, you would notice that some stocks you would have noticed by trading now that even if you have a good range and stuff, right? Let's say you have a good inside candlestick range powered by a super trend also, it's coming to the downside. Okay. But usually, like it just sometimes just stays a little bit over here. Breakout validation is also true, it's correct. But usually after a while, it might start to come back up, right? Might hit your stop loss and everything. Cool. This is a problem of trade locations, right? So we got to, this week's session is all about understanding at which levels we should trade and which levels we should not trade, right? So a trade location is very important to know if a breakout will work or not, right? Sometimes a breakout, you already know support resistance, right? Support resistance is nothing but your support is that area where every time price comes down, it will bounce back up, right? It will bounce back up every time. So imagine that there's a range breakout from here. Okay, if there's a range breakout from here, and if this is the support, right, we may expect a 1:2 target all the way there, right? But if the support is right here, right, it will start reversing from here itself. It may not hit our targets. So it's important for us to know where the solid or good support resistance zones are so that we can avoid such trades as well. Okay, so I'll just summarize the agenda for today's session. The agenda for today's session is, okay. We'll start with levels trading itself, which is nothing but we already know support resistance. This is an extension of it to make the concept very clear and how you can trade only based on support resistance. Again, we don't recommend trading only based on support resistance, but it's good to know as a trade location, it's something that we should know about. As a trading setup, I'll teach you the trading setup also, but that's not really what I want you guys to focus on. Levels support resistance will just focus as a trade location. I'll get in more detail about that pretty soon. All right, so we'll also cover up the next main agenda is our demand and supply zones, which are pretty important, right? This is a newer, like let's say support resistance used to be a concept which worked back in 2015, 2016 and everything. Like you could, the trade setups only based on support resistance used to work, but then it started slowly shifting the entire, all trading strategies switches every couple of years. Similarly, demand and supply zones became the next big thing that came up, and that has been working pretty well. I'm going to teach you some simple demand and supply zone setups, and we'll also try to trade on the pre-open market also today's session. Okay, pre-open market meaning you, as I think I mentioned in the last class also, market actually opens from 9 a.m. Right, so 9 a.m. to 9:15 a.m. you can still place your trades. That's what is called as the pre-open market. We'll have a discussion on that, and we'll understand there are some simple trading setups in which at from 9:15 itself we can start the trade. By 9:30, 9:45 you can be done with the trade, right? So That is some of the simple setups that we'll discuss, which is a combination of pre-open market and demand and supply zones. It's very easy setups. Very what do you say? It's one of those shortcut trades that we talk about, right? So we'll see how these things work. Cool. Let's start. Right. So as I mentioned, let's start with levels trading first. Support and resistance. Okay. So levels trading would be the first step. So let me give you a simple walkthrough explanation of what levels trading is. So levels trading simply says that there are different levels on a chart. Let's say the price is going down like this. Okay. In this scenario, the recent high and the recent low, these are your important support and resistance level. There are different types of support resistance. Like I'll just mention these here. There are different types of important levels, as we call it, right? SNR levels or important levels, right? There are different ones. For example, the day high, right? Day high is a support resistance level. Uh, right. I'll just type this here. Okay. Day high meaning, let's say today the price went up till here and the price came down till here, right? This day high and the low are areas of support and resistance. This could act like a resistance, this could act like a support. This is the basic version. These are not strong support resistance zones or anything. I'm just giving you, there are different types of support resistance. One of them is this, right? Similarly, even your previous day high, PDH, previous day high and previous day low, right? We call it PDH or PDL zones. These are also important zones of support resistance, right? So sometimes, right? Sometimes on the charts you would notice, let's say this is yesterday's chart. Okay, this is yesterday's chart. Let's mark the high and low of this, for example. Okay, this is now. Let's say there's a gap up opening. Okay, next day there's a gap up opening. It started around here. Okay, what you would notice is that when price may come down back to the previous day low, right? The gap might get filled and it may come back to the previous day low and it may jump up from here. Right? These are common observations that you can find on various charts. But just understand that this is because your previous day highs and previous day lows can also act like points of support resistance. Again, these are not trading setup. These are just discussion that I'm having with you just for your understanding and knowledge. But these are, we don't trade. It doesn't mean that if the price goes to previous day high, we don't go long or short it or anything. Not like that. Just want you guys to be informed that there are different levels in the market. All of these have a support, have some kind of buying pressure and selling pressure. These are all valid, right? Similarly, even your 52-week high, right? That is your all-time high stocks. All of these are good levels, as we call it. These are good trade locations. Okay, meaning in case of 52-week high stocks, I think we'll have a discussion from Akash also tomorrow on the session. But I'll just give you a very simple gist. That is 52-week high. That is in a year there are 52 weeks, right? For the past 1 year of time, let's say the stock last year went up till this high, and then it kept going down and stuff, right? And if the price again comes back, like this is the last 52 weeks, okay? This is the 52-week high, right? So in the last 52-week, if the price again comes back into this point, okay, these stocks are considered to be very bullish in nature. I'll repeat. What I mean by this is that if the stock is at a 52-week high, the 52-week high is this, and the price is coming back up to the 52-week high. Okay, all-time high stocks or 52-week high stocks. These are considered to be very bullish in nature. That is usually after this, it may have a range or something over here, and they usually tend to push up pretty fast. Okay, quick returns in a short period of time. So 52-week high stocks are pretty good for stocks filtration. These are all your swing trading setups, which will be part of a different session, but just want to keep you guys informed. These are all one example of trade location. All-time high, as the name suggests, like for from its all time, like when from the moment that the stock has been listed on the market, it's at this all time high, right? It might be say 10 years back or something. Also, if the price comes back to this, we call that as an all time high stock. All of this 52-week high, all time high, all of these are bullish in nature because they have a very strong buying pressure. Okay, so stocks close to these 52-week high, all time high, are very bullish in nature. uh, anyway, these are examples of trade locations. Now let's get to our main discussion, right? So our main discussion is that the main levels or market structures, right? The main levels of market structures that we have to learn about is our previous Sorry, recent swing high and recent swing low and low. Okay. What I mean by this is that let's say a stock is going up or down. Let's say the stock is going down. Okay. It went down like this. So at this point, oops, let's say at this point of time, the most recent swing high is this, and your most recent swing low is this. Okay. Your previous swing high is this one, and your previous swing high to that is this one. Right. So levels trading simply says that these are the levels on the chart. Let's call it there are upper levels and lower levels. Let's say this is level 1, level 2, level 3. To the upside, these are the levels, all the swing highs. It's a very simple concept. That is, if the price starts breaking through this level 1, if there's a valid breakout here, and if the price is above this, then we say that it will continue to go till level 2. Something or something will happen here. It might go crazy or whatever it is, but eventually it will go and hit level 2. That's what it says, right? From level 2, it may come down. Otherwise, if this also breaks, it may continue all the way to level 3. Okay. In other words, levels trading simply says that if a stock is uh, level trading simply says that stocks trade between levels. If one level breaks, it starts to go towards the next level. Okay. And if this level also breaks, it may go 10 to the next level. Okay. So charts works on levels to the upside as well as the downside. Let me just show you some examples on the chart so that it's more clearer. Uh, so if you want to analyze any stock based on, oops, okay, let's say you want to analyze Adani Enterprises. Let's do it on a 30 minutes time frame. Okay. I'll remove all the indicators and everything else. Right. So this is Adani. Let's put the swing high, swing low indicator to make our lives easier. All right. So this is very tight range. I'll tell you the plotting rules and everything one by one, but just I'll give you the general idea first. Then we'll get into when there are multiple red lines together, there's a different concept. We'll talk about that. Anyway, so our the recent swing high, swing low level, as you know, is this red line over there. That's the most recent swing high. Similarly, towards the bottom, this is the most recent swing low. Right, I'm just drawing a small rectangle around it. I'll get in detail about how this rectangle works pretty soon. Uh, but yeah, this is the idea. So to the downside, if you see there is a blue line over here also, this could be the next level to the downside. There's a blue line here also, right? All of this. This could be our third level. This is for the downside. Okay. Downside meaning we can be prepared for both sides. If it's going up, it will go to the swing highs. If it's going down, where is the next blue line? Next blue line is here. So if the price comes down from here, it will go to this line. If it goes even further from here, we say that it will go and hit the last level, level 3. Okay. So level trading simply says that if it goes below this, short it, right? Your stop loss above this rectangle, and then this could be a final target. First target could be here. You can make exits there. Uh, and your final target over here. This is a small brief on levels trading. This is for the downside direction. Similarly, if you were looking at the same chart in the upside direction, if it starts breaking above, okay, what are the next significant levels? Let's say the recent red, there is one red over here, like that's still part of the same zone. But let's say that is level 1. If it goes even above that, you can see where is the next red line. It's somewhere around here, right? So it has potential to go up till here. This could be level 3. Okay. There are levels in between also, but we'll discuss that pretty soon. So the idea is simple. If the price starts going above this, it has a tendency to go all the way till here. Okay. From this level, it can go and hit your target level around here, which is a pretty big target, right? So idea is simple. You would actually go long, right? You would go long, expecting it to go up till here, with your stop loss just below the rectangle zone that you do. Okay. This is the kind of moment that we are expecting for Adani Enterprises. So let's do this one more time. I'll give you the steps one by one on how to analyze any stock. So whichever stock that you want to analyze, you can have, oops, okay, this was Cipla, right? Okay, this is Cipla, right? So step one would be, all right. So our step one in this scenario would be mark the recent swing high and low on a 30 minutes time frame. Okay. How do you to mark the zone? Right? If you want to mark the zone, what you have to do is you use a rectangle tool. Use a rectangle tool. From the top of this red line, just draw a little bit towards the nearest candlestick body. It doesn't have to be the same candlestick or anything. Like wherever is the nearest candlestick body. In this situation, you can see the candlestick body is here. So I just draw a small zone like this. Okay. Ideally, breakout points, if it goes above this single line over here, that's what it matters. Like we draw a zone because it helps with our psychology. Okay. Again, it's a psychological thing. Usually, when the price comes near this line itself, right, we tend to have very strong impulses in our brain, which tells us to buy right away and all these things. Hope basically comes into the picture. Emotions comes out there. But if it's inside a trading range like this, right? If you draw a rectangle zone, we know that we should be waiting inside the zone, right? No action within the zone. Only for exits, we can exit inside the zone. Uh, for entry, we'll be waiting and waiting. So this usually helps our psychology. Uh, it helps especially in exits also. I'll show you the exit condition, but this is it. I'll repeat to draw the line from the top of this red wick, right? Red line, that's your resistance line. Drag it down to wherever is the nearest candlestick body. Okay, this is the candlestick body, so I just drag it out. Okay, so this is your recent swing high level. Okay, this is your most recent swing high or your first L1 or resistance one, R1 or S1, all these things. Yeah, this is your first resistance zone, the recent red candlestick. Similarly, in the blue side, you can see this is the most recent one. Just draw it. The candlestick body is right there itself, a very slim zone. Okay, that's the zone. Now the idea is simple. We can say that Cipla, if it starts going above this zone, for example, if it starts going above this zone, that is this red line 1505, it should cross it with proper breakout validation condition. Okay, this breakout should happen on the 5 minutes time frame, just like how we trade inside candlesticks price action. Same step over here also. Step two, uh, sorry, step two is not breakout. Step two is mark the target zones, target levels on 30 minutes. Target levels means that where is the next target that you can see from after this blue line or after this red line, the big target that you can see is around here as the biggest one, right? So I can just mark, there are three of them. I can just from the furthest out one, drag it down to the nearest candlestick body, okay, and drag it out. This is the main level for Cipla. Okay. So idea is when we take our exits, we draw the zone because we don't exit at this top or anything. Once it touches the zone itself, once it reaches the zone itself, we can start exiting. Okay, this is usually much better in terms of exit. Otherwise, we may have that psychology too. If it's a single line, right? When we talk about targets, we talk about targets in a sense that if it reaches 1530, I will exit, right? Most times it will come near 1530 and may start reversing, right? So that's why for targets, it's always better to trade in a zone. If there's a zone, once it reaches your zone itself, we can start taking your exits, right? Much better than having a single target. Okay, so this is your trading setup here. If it goes to upside, buy it over here. Sorry, let's make the step 3 and 4 on text also. Let's do go for the bottom side as well. If it starts crossing below this, uh, I mean, there is one same level there. You can see there are a couple of three of them over here, right? I can just draw a line like this. This would be your level 3. Okay, if it goes down, so Cipla, in a nutshell, if it goes down, it can go down till 1460 around this range. If it goes up, it has the potential to go up to 1550 also, right? Pretty big upside movement as well as downside movement. Right. So this is your Cipla's analysis. So this way you can analyze any stock you want, even if it's for your long term also, same concept. Like if you look at Kotak Mahindra Bank now, right? You can just draw a line over here on the upside. That's your swing high. Similarly, if it goes further up, right, your target is going to be this level, right, this swing high over here. So if it goes up, it can go up and hit your target over there. Right? So it will be like a trade like this. Just a little bit below of your rectangle zone would be your stop loss. Okay, the just a bit below of your rectangle zone is your stop loss. This is because of a concept we discussed in last class itself. That is, if it's a resistance zone, okay, if it's a resistance zone, once the price breaks out of a resistance, it will now act like a support. Role reversal or the flip of character happens, right? An earlier resistance after a valid breakout will act like a support, right? So when the price comes back down here, if it's a valid breakout, buyers will again enter the trade. This is what we call as a retest. Right? Again, discussions from last class itself, just refreshing the concept. So any resistance zone, whichever swing high that we made also, right? After it breaks out, it may come back down to the same support zone, right? So in this scenario, let's say, okay, why is our the reason why our stop loss is below this zone is because, okay, it's because let's say a valid breakout happened over here. There's a valid breakout. This means that after this means that this resistance earlier will now act like a support. Okay, it will act like a support. This means that if the price comes back down, if the price comes back down, then buyers would start entering the market. Okay, buyers would start stepping in the market at this point. That's a buying action. So this is a retest zone. So that's why our stop loss would be below this zone. If you're going long here, right, stop loss would be below this zone, because if the zone fails, that means that resistance also, I mean, that breakout completely failed. There's no retest or anything, right? So this is the logic why we have to keep our stop loss below that zone. So this is the last point of retest. Till here, it may retest. If it goes below this, then it's no longer a valid breakout. That's a completely different case. Okay. So that's our stop loss, and a target we can achieve till here somewhere. Do we have to consider overall momentum entering using the strategy? Yes. As I mentioned, if you want more accuracy, you have to combine momentum with it. This is just a plain setup. Momentum, like you can see this Kotak Mahindra right now, the momentum started being bullish, right? Generally, uh, like on a general time frame, like you can see it's making higher highs, and it's trying to make an uptrending move. If it starts for going further up, there's a high chance it's going to continue its move. Like it's already uptrending a little bit. A further uptrend, a further move up will only cause a big effect. Uh,
Should we look at 4 hours? I mean, the higher time frames, right? When we are looking at the a
yeah,
bit higher.
I was just getting into that. You can see there's a momentum switch on Kotak Bank here, and this is the reason why it's already bullish. Will this work better on intraday or swing? If you want to trade this as an individual setup, it'll be better for swing. The reason is sometimes the target may not, if the target is very big, it may not hit in a single day. It may go halfway one day, the second day might go hit the rest. Right? So there is that risk over here if you're doing intraday. Okay, but I'll just finish the setup and I'll tell you how we can use it in our trading styles and everything. Uh, Okay, so mark the target levels on 30 minutes time frame. Step 3 would be switch to 5 minutes time frame and wait for valid breakout. Like everything is basically the same step as your inside candlestick reserve. Set your SL as below the trading zone. Okay, cool. Now a couple of things that we have to discuss now is the setup. This is the setup. The setup is simple. On 30 minutes time frame, mark the swing high, mark the swing low, right? And the next target would be here. You can see this one hit the first target already, and it's moving further up also, right? So that could be like you can see the next target also it crossed. Uh, Maybe it's heading towards the final target. Anyway, our main discussion. So there's a couple of plotting rules we have to discuss. and then we can see how we can use this in our trading styles. Plotting rules is that the first plotting rule that I said is, let's say this is the recent swing high, recent swing low, right? If there's a candlestick, like this could be the wick of the candlestick, there might be some other candlestick nearby also, right? If this is the case, we draw a box, rectangle box covering from the top of this wick till the nearest candlestick body. Okay, this is the more nearer candlestick body. Okay, let's say these are the candlestick body. This will be a swing high. Cool. The next condition is, another plotting rule is, here, I'll just type this in so that it's not missed out. Plotting rules. First one, from the top of the wick, the recent wick, so the rectangle till the nearest candlestick's body. Okay, this is the first plotting rule that we discussed. Second, if there are multiple zones or multiple lines nearby, swing highs nearby, swing high or lows nearby, in this situation, we draw a zone by combining all of them. What I mean by this is that if you see on the chart, right, sometimes you will notice, okay, uh, it's not a very good moment, pretty bad moment, in fact. But check out these, right? There's one line here, one line here, one line here, one line here, right? There are multiple lines at the same zone. Even in the lower zones, also, you can see multiple lines in the support as well, right? So in these cases, just from the top of this scenario till the lowest wick would be your trading zone. Okay, like when there are multiple zones, ignore all the betweens one. Just draw a zone from the top till the bottom. Okay, from the top of the swing highs to the bottom of the swing highs, just draw the zone. This is your trading zone in this case, right? So if you were taking a trade over here, uh, I mean, this could be, this could be either be a trade failure or a valid breakout. We'll have to check that in 5 minutes time frame. We'll look at that. Uh, let's look at that area. Again, these are a little tight. If this was a breakout candle, okay, I think this would be a stop loss. It's almost like 50% outside, 50% inside. But let's take this as a stop loss hit itself. Like our stop loss would be hitting over here, right? Ideally, we should have entered there, but did not work out well, right? So uh, that's a trade failure in this case. Anyway, let's see. Eventually, it did go up and hit the target, but again, that's a different story. One sec. Anyway, so as I was saying, plotting rules, when you have multiple lines, combine them together. Similarly, on the lower side also, if there are multiple blue lines together, you combine all three together like this. Okay, this is your support zone. Cool. So these are your general plotting rules. As I mentioned, we are not trading on this setup explicitly. Like this is good. Like levels trading in general, we can say like on a 1 day time frame or something. If you want to find a stock, like let's say Tata Motors, right? Tata Motors, you can see a momentum switch is happening already, right? You can see new higher highs formation is also coming out right now. So Tata Motors could be after a very long time, it's starting to reverse. A lot of good signs. It may be the start of a new trend, right? As you know, Tata Motors, this is the first momentum switch, but if it forms a higher high, higher low, higher high, then we can expect really big uptrending movements. Right? But in from a general levels trading perspective, this is the recent level. This is the recent level to the downside. If it crosses above this, our next level is going to be, let's say, this red line, right? So we can expect Tata Motors to go all the way up to 1,000 rupees level. This is our initial analysis. Okay. But there's also one more third rule of plotting that you should be knowing about. Okay. The third rule of plotting simply says that, uh, as we know, here in between this, even though the next swing high level is this one over here, next swing high level wise, that is the right. I mean, If you look at the swing high option, this is the next swing high option. That is true, right? But you would see that in between this, there is a, like you can see these blue lines in between, right? All these blue lines coming in between, which are forming like a zone over here also. Like even if it's this zone, like multiple blue lines along the same direction, right? In that area, you can see multiple blue lines. So if we remember, if we look back at the concept that we learned that there's a flip of character. Let's say there's a support line. There used to be a support, this blue line over here, multiple blue lines. If this was a support earlier, if it gives a breakout, now it will also flip its character. This support should now act like a resistance. Okay. This support should now act like a resistance. So that means if the price comes back up again here, it should move back down again, right? Another levels in between. Okay. So the new rule that comes in is that just one more rule of plotting that we have to keep in mind is that if there are multiple blue lines, okay, if it's just one blue line, ignore it, it's completely fine. If you can find three blue lines along the same region or area, if there are multiple blue or lines or uh, they can form an area of resistance support. Blue or red lines. Okay. Uh, After its flip of character. What I mean by that, if you were just looking at only the normal rules of levels trading, where it says from one level swing high, it goes to the next swing high. Sometimes it may go halfway. Okay, it may go halfway and it may start reversing. Okay, that reversal is usually because there's another zone in between. That zone is if you see multiple blue lines nearby like these, that's your next swing high zone, right? So your target for Tata Motors is actually not 1,000 rupees. Your target, your next immediate target for this one would be around 900, 940. Once it reaches this region itself, you can start taking your exits from levels trading perspective. If you were trading only based on levels, your trade would be this from this angle, I mean from this line all the way to this line. So this is your upside on Tata Motors that you want to capture. Let me just make it clear. You can see there's one blue line here, one blue line here, and all these things, but it's not multiple. Like we need multiple blue lines nearby. If there are at least three blue lines nearby in an area or level like this, that's when we call that as a zone. Okay, just one of them would not matter. If you have multiple of them, then we have to make that as a swing high zone. Cool. So this is pretty much all about levels trading that you need to know. We need to know how to apply this to our daily life or our trading setups as well. As I mentioned, I don't want you guys to trade directly levels. It's if you want to go for it, no problem. But a better way to trade or utilize levels is mainly for target setting. Okay, what I mean by this is that uh, for example, this case itself, right now this is SBI Life Insurance. You can see there's a swing high level. Okay. And it's giving a breakout now. If it goes up, it's going to go up all the way till here. Okay, that's a clean cut example, right? No blue levels in between or anything. That's your next swing. And so this trade you can even take right now. Tomorrow onwards, you can expect it to start pushing up, right? Now, if you looked at this concept a little more in depth, okay, let's mix up the things that we learned from before. If you looked here, there is a small trading range also here. Right? There's a couple of trading ranges here. There's one here. There's one there. Anyway, there's like a trading range here along with the levels breakout. Okay, like you can even see this trading range was from here onwards, but it gave a fake out, right? So anyway, excellent trading range. Uh, what I'm trying to say here is that our trading setup, we can still stick to just trading ranges itself. We don't need to technically use levels, but if a trading range, a TR, a trading range or an inside candlestick is giving a breakout along with the levels breakout. That's much more stronger, obviously. Okay. Here it's a IC plus levels breakout. Again, combining two different trading strategies together, we're getting both a resistance breakout and an inside candlestick breakout in the same scenario, right? So these tends to work better, obviously. But mainly, I see till now we were just saying that okay, if it starts breaking out, we'll just take a 1:2 ratio over here, right? This was our initial IC formation, like previous candlesticks low is your stop loss, 1:2 is your target. Okay. So this week we're saying that forget your 1:2 targets anymore. You don't have to stick to 1:2 anymore. Instead, look at the gap between them. Your target now, the same IC plus ST setup and everything, your target now is going to be the next swing high. Wherever is your next swing high, that is going to be your target. Okay? Your target is no longer 1:2. Instead, wherever is the next swing high region, that is your stop loss. That is your target. Okay, this is the main application for us for our trades. To know where the next resistance zone is or to know when to exit, that's why we really use levels trading. Okay, so levels trading is a form of exit strategy. Like levels trading for us is mainly used for getting our exit levels. Okay, it's basically exit levels or target setting. That's what we mainly focus for levels trading on. So let me give you an application of this on our trading side. Like whatever we have done so far, we don't want to change it. If you want to trade only based on levels, you can give it a go. That's support resistance. But again, sometimes the accuracy may not work out as expected. If you want to do levels itself, I would suggest at least have some trading range in that level. Some IC breakout plus levels would tend to slightly work better. Uh, I don't recommend trading only based on levels. I'm telling you this because levels you should know as a trading setup, support resistance basic setup. But technically, if you want accuracy, don't trade only based on levels. You need some trading range or maybe an indicator, could be anything to support your analysis, right? So that usually tends to work better. Anyway, for us, if you want to use levels, what we use it for is we, right? Uh, I'll just write it on here. If you want to use levels, what we use it for is that let's say we are very comfortable with our inside candlestick trading ranges as of now. I hope, right? Your super trend and all these things are there. But only thing that you have to make sure is that if this breakout is coming in this region, if there is an immediate support level nearby, okay, let's say there's a swing low zone right underneath this, okay, if the target zone is here itself, if the distance is very small, that's not worth your time, right? You can short this, but the reward is very small for you. That's not really worth your time. Like as I mentioned in the start, we have in a day we can get hundreds of trading opportunity, or say let's say we'll get to say at least 10 proper inside candlestick plus super trend trading setups, right? In a day itself we can find 10 different stocks giving us the setup that we want. But out of these 10 stocks, you got to filter out the distance between the target. Okay, distance to the target. That is, here the target is, it's a small target in the downside. But let's say to the upside, if there's a big target, okay, if the target is pretty high, if there's a good space for the stock to move up, right? Think about it this way: the stock, this levels tells us how much freedom the stock has. If there's a big space, it means that the stock is free to move upwards very easily. It can easily move upwards comfortably without much resistance or anything. But if there is nearby levels and everything, it'll be hard for the stock to move. Okay. So based on this, let's just do a quick analysis. Let's do our same inside candlestick breakout trades and everything. Let's make a small watch list based on the 30 minutes time frame for tomorrow's chart. Okay. So again, random things. You can see Devis Lab is trading in an inside candlestick range. This is a pretty big range. There's smaller ranges here also. Like let's say this is the trading range. Shit. Okay. Uh, this is not this indicator is not picking up, but this is also swing low. Uh, yeah, but there's also a swing low. It's not shown on the chart properly, but multiple lines here. Uh, it's if you switch to a line chart, it might be easier to see. See, in the line chart, you don't see that big move down. This is the actual swing low zone. Uh, Indicator, that's the problem with an indicator. But anyway, what I'm trying to say here is that you can see this is the in Divis Lab, let's say this is the most recent trading range. Horizontal, right? Cool. Now we got a problem to the upside and to the downside. On the upside, you can see all, you can even combine these three together, even the red line together also here, right? And the blue lines, blue or red, right? So we're getting a region very, like, if it goes up also, it may face immediate resistance to the top. If it goes down also, I mean, it's more, a little more easier, but still, there is some, the gap between them is not that great, right? So now we can shortlist that. Okay, this may not be the best trade. It may work, but not the best trade for us. Cool. Let's go to Ultra Semco. Uh, awesome. So Ultra Semco is trading inside an inside trading and range like this. What do you guys think? Is this good to take? Okay, is this good to take to the downside? Yeah, let's say to the downside. Do you guys think it's a good trade to the downside? Should we take this trade to the downside? Yes, no, maybe. Yes, yes, okay. Yes, cool. So, a common doubt, I'll just explain one more thing here, which is you can see there is one blue line over very nearby also. Like these three blue lines together is the actual swing low, right? I mean, this swing low, there's one right here also. So, in these scenarios, the answer is yes, though. It has potential to go to the downside, but only thing is it has to clear this blue line also, right? That last swing low zone. If it starts clearing out from here, if it starts going down, then it's a free fall. There's a lot of opportunity for it to go down, right? So this is a pretty good stock to trade on. As you can see, there's no multiple red or blue lines or anything over here nearby. It's a pretty simple fall to the downside, right? So Divis Lab could be, I mean, Ultratech Cement could be something we can shortlist for the upside, I mean, downside. Okay. Similarly, for the upside also, you can see the next potential is somewhere around here, I think. Again, decent space up, not bad. But for the downside, definitely Devis Lab is something. I mean, Ultratech Cement is something we can use, right? Let's do more examples to make the concept clear. Okay, this is Adani Port. Okay. Multiple blue line. Let's mark the recent swing and recent swing low. Right here also there's the recent swing low, but you can see multiple blue lines, right? So the level that you draw is combine these blue lines together. This is your last zone. Okay. And it already gave an inside candlestick breakout. It already gave an inside candlestick breakout, as you can see. It's just waiting to clear the zone also, right? So ideally, if you did not know about zone trading, right? If you did not know about zone trading, we would have shorted on this inside candlestick pattern. We are expecting a 1:2 movement. Like we are expecting it to go all the way down till here, right? But I'm saying that this is not still a valid trade right now because level has not crossed yet. Okay, it is in a support level right now. Support level meaning these three blue lines are there. This is the current support zone. Okay, this is the current support zone. Right? Yeah, this is the current support zone, because of which, even though it is an inside candlestick breakout, it still does not have the green signal for it to go down. If it goes down a little bit more from here, then it's a green signal that it can go down. Okay. In this case, the target for us is these red lines. Okay. Normally, we would say it's the blue line, right? But in between, we can see there is at least three red lines, right? You can see these three red lines. So this level is going to be our target. Okay, this is going to be our target. Again, the space is not that bad. It has a pretty good movement. This is still a good, it's still a good stock for intraday. We can short this over here, right? We would try to short somewhere around here. Expect the target to be somewhere in between, right? A good 2% move. That's really good for intraday. Right? This could be our trade for this example. All right. We'll do one or two more examples just to, like, to be clear. What I want you guys to take back from levels trading is that it's not the setup itself. Setup itself is fine. You can start making your research reports and everything now if you want. That is, if you want to do a stock analysis, or someone in your family asks you, like, when should I buy Reliance or HDFC Bank and everything, tell them now you can tell them the correct levels. Like you can see Axis Bank, it just crossed beyond this level. It might cross beyond this also. Like, all of these are levels for entry. So levels trading can be good for long-term entries and everything. It's a very rough estimate on when the breakout happens. Um, that way it's good. Yeah, but for intraday trading and all these things, for our main trading objectives, we use levels as a target zone. Okay, the amount of space it has to target is what matters. Okay, let's take one example. Can you check Jindal Poly? Let's do that. We can consider further movement only if the body closes, right? Yes, not just the big touch. Correct. So our breakout validation rules and everything is still the same. We need that to be a proper closing below it. Okay. Anyway, this is general poly. It gave a breakout, I think, of the 52-week high also. A pretty good breakout. This is a 52-week high or not? Yeah, it's an all-time high, I think. You can see general poly has never crossed this line, if I'm not wrong. Yeah, it looks like an all-time high stop. I'll switch to a 1 day time frame just to see better. 1 week. It's not an all-time high stock, but I think it's a 52-week high. In the last 1 year of time, right, from 2025 to 2024, 2023, you can see it's a 52-week high. The stock has reached the 52-week high stock, right? So usually it's going to be bullish itself. It'll continue. Let's analyze this for our long-term methods, right? So as you can see, this is on a 1 week time frame. I'm talking from a positional trading perspective, right? Momentum flipped over here, as you can see that. Momentum switched, higher high formation, a higher low formation. Okay. This now it's trying to push further up to the next higher high. It could be the start of an uptrend. It could be the start of an uptrend, which is a really positive sign. Just make sure if you're going for this long-term investment, just make sure that its fundamentals are also good. Let's have a look at trend lines. Awesome. So this looks like a really good sign. It's a strong performer, all green all across. Looks like single polyfilms. There you go. Good stock for long term. As we saw, durability was good, valuation is good, momentum is good, and plus it's just starting the uptrend. So it will have at least 6 months of movement up, or even up to 2 years of movement up. Right. So pretty good stock and levels also wise. This is one level that it crossed. Yeah. Just levels wise, if you look at the target, right, these two are pretty much the same itself. I'm not considering this as a target zone. Uh, Levels wise, the next target is you can see three lines together. Draw a line, right? This is your target zone. So 1200 would be your immediate target if you want, right? So, but if you're doing postal trading, I would recommend, keep holding for at least 6 months of time or even more. Our immediate target now would be 1200. Zomato is also near 52-week high. Okay, awesome. Let's have a look. Zomato is at an all-time high, in fact. Okay, so if you want to trade all-time high stocks, it's a little different. We have to do a little Fibonacci retracements. We'll discuss that soon. Okay, no problem. Anyway, so there's also a question that comes up, right? Which is, see, Zomato is at an all-time high. How do you know? How do you know what target to set now? Till where can it go up? Right. So this comes as part of Fibonacci extensions. We'll talk about that. We'll talk about that once we have finished with. Uh, you know what? We'll actually finish Fibonacci and then go into demand supply. We have time, I think. Fibonacci because of uncharted zone. Yes, there's no chart here actually. Right. There's no target that we can set as per our normal trades. So this is your uncharted territory. So to use this, what we'll do is uh, again, it's on. This can be done on any time frame, daily, weekly, or even monthly. Let's say for the long term, if you want to do weekly, right? Just a quick introduction to Fibonacci first. Fibonacci has two things in it. One is your Fibonacci retracements. Okay. Let's say a price goes up from point A to point B. Let's say I'll draw a chart. From point A to point B, it went up. Okay. Uh, it basically says that as per Fibonacci, you can use this Fibonacci retracements tool over here. Okay. Fibonacci retracement. It will be there on all your DMAT platforms also. From point A to point B, just draw a line, extend this out. So change the config. If it's not configured properly, just change the configuration. You can set the settings button. You like I think the basic versions will have all of these lines and everything. Just tick those off. You just need 0.382, 0.5, and 0.618. Okay. It may go down to 0.8 also, but it's okay. Just keep these three. This is the standard default on most broker platforms. And you can see 0.382, 0.5, 0.618. Okay. So what Fibonacci retracement says is that if the price comes back down from this point, okay, if the price comes back down to this level, 0.38 level, okay, uh, like as we know, market moves in impulses and then takes a step back, right? The step back is what we call as a retracement. So this retracement can either come back down to 38 percentage of the move. It can come back down till here, then move back up, or it can come back down to say 0.5% level, like a little more deeper retracement, and then go back up, like go back up from here, or it can come down to the 0.618 level and go back up, right? So in simple words, Fibonacci retracement tells us the zones from which price will continue its up move. Price does an up move, takes a break. From where will it continue back up? Right? This is usually between the 0.38 level, 0.5, 0.68 level. Right? So it might the last zone may come to 0.618. This is what we call as a golden zone between 0.5 to 618. Right? This is the best zone for entry for Fibonacci's. Again, we'll discuss on trading based on Fibonacci trade retracements alone later. Uh, like technically, we don't trade only based on Fibonacci retracements. It's a combination of different styles. But this is just a zone, just like our support and resistance zone. This is also one more support zone in the market. Okay. This is not important for us right now. For us, target setting wise, what is the benefit of this is that this is the basic concept of Fibonacci retracement, right? Version one is this. I'll repeat the version one. Version one simply says that if the price goes up, it may come back down. It may go back up from either the 38% level, right? Or it may come down a little more further to 50%, then go back up. Or it may come down 50, 60% and then go back up. If it goes below this, then it's a reversal. It's not a retracement anymore. It's a reversal. That's what it says. Now, the extension of this is that this is what is useful for us. Extension simply is the same thing, right? The swing high to swing low, you just mark a line. For example, this is on the weekly time frame. You will see one more option, Fibonacci trend-based Fibonacci extension. This is what is of use for us. Just click on this. Okay. From the recent swing low, that is this blue line over here, drag a line to the recent swing high all the way till here. Okay. If you click that and drag it out, now you have an extension zones. Okay. Extension zones are nothing but it says that it may go up all the way to 0.382 and then it may reverse, or 6.8 and then reverse. Okay. These are the two reversal zones. Cool. So usually if you want to time your exits, Zomato, it may go up to 360 and it will find selling pressure from there onwards. If it again manages to go further, it may go up to 400 and may start taking reversals from there. Right. So at the current moment, if you wanted to set a target, a good exit point for Zomato, your exit would be at 360. Okay. Again, this is for your long term on a weekly time frame. If you want more aggressive, you can go for 1 day time frame also. Obviously, the levels would be a little different now. Same concept though. Recent swing low to recent swing high. Just draw a line. Right? Recent swing low to recent swing high. Just draw a line. You can see these are the recent on a shorter scale. This it may have some reversal from 320 and everything. Okay. This is in a shorter time frame, like in a swing trading methodology. So within 2 weeks time and everything, these are your targets or places from where it can reverse. But if you're looking for a slightly longer term, that is for a couple of months' time, you do the same thing on a weekly time frame. Right? That's what we did earlier. Right? This is the on a weekly time frame. It's showing that Zomato has the potential to reach 350, 400, and all these levels. Uh, so that's it. If you take, let's take a couple more examples to see it properly. I mean, these were all good levels. I think this is Nestle India. As you can see, it hit the target perfectly. I think this was one of the previous classes. So at that point, this was the swing low. This was the swing high, right? We marked that level to here. It was coinciding with the swing high over here also, and beauty, right? Exactly hit that level. Started reversing from there. This is one of the applications. Let's see more examples. Asian Paints also. If it was going to the upside, right? Swing high to swing low to swing high, just mark it out. These are your target zones. Okay, that's how we function. Uh, so yeah, I think it's very straightforward. It's not too complicated. So any 52-week high stocks that you find. So this is L&T Technologies if you want. Took some trades there. Anyway, uh, L&T Technology also, if you're expecting a price move to the upside, trend-based extension, this till this, drag it out, you have your levels. Okay, this is again almost a 52-week high stop. Same thing. You can expect reversals from around 6,700 or even say 7,200 and all these things. Cool. Simple setup, easy to follow. Uh, Use this for mainly investing purposes. Even for intraday trading and swing trading, also it can work on shorter time frame. But yeah, this is mainly used for target setting for all-time high stocks. Okay, awesome. So now let's get to the one of the core parts of today's session, which is your demand and supply zones. Cool. Everything clear so far, guys? All good? Can we close target setting? There are two target setting, one Fibonacci extensions for your all-time high and 52-week high stocks. And the second one, if you are the main levels trading wise, the take back that I want from for you guys is that if you find any trading opportunities, just see that if there's a support or resistance level nearby. If it's very near, don't take it. There should be a good gap between them. The gap is what we do for stock selection. So out of the 10 or 20 trading setups you find in a day, I will only say 3 or 4 of these would be having a good gap. Okay. If you find that gap, go for those trades. It will give you beautiful returns. Cool. Right, guys. One confirmation so that I can move forward from you guys, as much as you guys please. Do we have any indicator for this? For Fibonacci, for levels, there's no indicator as such. Just the swing high, swing low is the indicator for levels. And Fibonacci also is the same. There's no other indicators that I've seen. Okay. Guys, can I get a confirmation? All good? Can I move forward? Yes, no, maybe. Yes, yes, yes. Okay. Ooh, thank you. Swing high low must be seen in lower time frame. Depends on which style of trading you're going for. If you want to do intraday trading, 30 minutes time frame, right? This is just like how we talked about in the first class, right? So if you do not want to, whatever setup we talk about, if you want to do intraday trading, analyze on 30 minutes, right? So your levels and everything would be on 30 minutes. If you want to do the same thing on for swing trading, analyze this on a 4 hours time frame. If you want to do it for positional trading, long term, analyze the same thing on a 1 week time frame. Okay. The stock price matters when we are choosing a stock? Not really. Stock price does not really matter. Like even if it's a price movement is pretty much the same. The what matters is how much percentage the stock moves up or down. It's not even if it's 5,000 rupees, the percentage is the thing that matters. Even if it's 10 rupees or 5,000 rupees, the movement would pretty much be the same itself. Okay. A quick recap. Cool. Just a quick recap, guys. Levels trading wise, we talked about you enable the swing high and swing low indicator, right? Let me get a clean example. This is on a 30 minutes time frame. Let's say Reliance, for example, right? So you can mark the recent swing high region like this. I'm combining the 3 red lines together, and this is your recent swing low. Cool. Now your target level is going to be, if the price starts coming down, your target is, this is your first target to the downside. If it goes down, it'll hit this target, might start reversing. If it goes further down, we can see there is two, three, four red lines. So this was a resistance which now turned to a support. So again, this same point here itself, right? So if it goes down a little bit, there's a lot of resistance. Sorry, there's a lot of support from the downside. If it goes even further down, then there's a good potential for it to, like, these levels and everything could be the ones. Okay. That's for the downside. For the upside, we'll have to find previous swing highs. So you can see if it goes up, it has the potential to go up to like here and all these levels. Right. That's the set of levels for the upside. So that's what levels is in basic sense. If it goes up, it can go up till the next level. If it goes down, it can go down till the next level. And we also discussed this is usually used for swing trading and positionals, not that on intraday, it may give the result on the same day itself. Maybe it might go hit the target on the next day. So there is that risk over there. Whereas the way that we are using this for intraday is we are not changing our trade setup. We are using this as a filtration mechanism, okay, a stock filtration mechanism, or a stock, sorry, a watch list mechanism, right? So our idea now is that we've been trading on trade range breakouts and everything so far. Keep doing the same thing itself. We don't have to change much. The only thing is you would have noticed some range breakouts fade after a small duration. That's usually because there is a supply nearby. I mean, if there is a support region very close by where this gap is small, don't take those trades. Okay. If it has a very big gap, then take those trades. Okay. This is what we discussed so far.
One question, Akash. I just got like a doubt on one item. So recent, if we are observing an uptrend, right? Like we are going to mark a stock that is going to go up to the next like high zone. In
Mhm.
that time, there is a like lower the blue color indicators also there, like the blue color lines are there. On that front, when we are considering a movement from one red zone to the other red zone, but we do have a blue zone in between,
Mhm.
like should we consider that blue zone as a kind of a resistance in the
Yeah.
upward?
So the question is this thing, right? Let's say this is the target zone.
Yeah,
Okay. And let's say this is our current zone.
yeah,
Okay. And here in between, there are blue lines.
yeah.
Cool. So in this case, if we have three blue lines at least, we need at least three blue lines. In that scenario, these blue lines can be combined together to form one more zone. This will
Okay,
be also here. This will be the next resistance zone.
okay. So more than like three,
Yeah,
there is
at
three or
least
more.
three, two or
Okay,
more actually. We
two or
need
more.
generally, I would say three. Like
Okay,
have three of them. Right? This is part of your plotting rules. The third one over there. Okay,
okay.
awesome guys. Did I miss anything?
Bro, just a question out of curiosity.
Yeah.
So there are multiple ways of like choosing the stocks, right, for breakouts. So personally, like what is the thing like you see? For example, say swing.
Mm-hmm.
So suppose if you take a stock for swing, like what is the what are the basic things you see? Like I mean, you will have something in mind, right? For example, or for example, like you will have something right for
Right.
breakouts.
Right. I'll just give you my this thing, right? If you want to do swing, from what we know, 52-week high stocks is a trade location, which is pretty bullish in nature. 52-week high or all-time high, right? And these, like, it doesn't have to cross the 52-week high. Like, let's say 5% away from 52-week high. Okay. These stocks usually will have a momentum switch. Okay. Like momentum switch. By momentum switch, what I mean by that is that, let's say one sec. Yeah. Let's say around that region, there was some red candlesticks and everything. And finally, a green candlestick broke the proper high of that. Okay. That's the momentum switch. This is a good point of entry. Like from this point onwards for swing, it's really good. Now you can jump into, you can even find inside candlestick pattern or any trading indicator. Any setup actually works, right? So, uh, generally, for swing, we only trade on 52-week high stocks, or there is something called as base over base structures. That's again, I think that'll be next week's class, base over base structures. These are also pretty good for getting a swing trades in. Right.
Okay.
So that's a swing trading setup. Okay, awesome. Anything else? All right, so I think we are done with levels. Hope you guys, all your questions are also clear. Oh, there's a question here which is if the stock has already moved 1.5% up or downwards without any setup, should we skip that stock or capture reversal? So if a stock has moved up, say 1% already, it's very hard for it to move further up in a day. Like generally, a stock movement is between 1 to 2% in a day. Right? Only some rarer stocks, if there is some really good news about the company or something, it may start going up further up. So generally, if a stock has moved up so well, and then now it's giving a levels breakout, and there's a long distance to the next level, it won't go to the next level. It will consolidate there for that day. Next day or something, it may go and hit the main level. But if a stock has had a big movement up already, the more chances are reversal has a better option over there. But for it to continue that much big movement, it's not much of a practically it's not that helpful. Like some 1 or 2 times it has happened, but most of the time it won't happen. If you have the option, you can capture reversal on this. Yes. Okay. Great. So intraday, it's the same. Intraday, whatever we discussed, I would say for intraday, don't use levels. Right. For intraday, what I want you guys to do is stick to the same setup itself, inside candlestick plus breakout. Momentum first, right? On 4 hours time frame, if there's a momentum switch, if the momentum is bearish, plus you find an inside candlestick which is also giving a bearish signal. Okay. Let's say momentum could be step number 1 for filtration. Step number 2, find your trading range, find inside candlestick plus ST setups, super trend setups, best thing, right? So, and it's in the direction of the momentum also. Third step that we are introducing today is target, right? Target meaning if the target is too close, if the swing support zone is very close by, that's not the ideal trade. If you want the best trade, the target zone should be a little far away from there. There should be a good breathing space, right? There should be the stock should be able to comfortably move down without any resistance and everything, right? So this is our setup. Fair value gap, we'll discuss that right now, right? So ideally, yes, one of the entry criteria is fair value gaps. I think you guys would be trading with Akash with FVGs. We'll have an introduction into that now. Okay, so awesome, guys. I think this is it. We can close levels and the other things for now. Let's start with demand and supply zones. Okay, I'll just take out the notes. So this what we're looking for is institutional footprint. Okay, footprint meaning there are areas on the chart, as you know, institutions keep buying and selling all the time. Institution meaning anyone with a lot of cash, like let's say 100 crores or something. People are investing 100 crores into the market of 50 crores into the market. These guys tend to create a big impact. That is, if they buy at any point of time, right? If they put a market order with a chunk of money, right? If they do a market order, it will obviously just jump the prices up like a big price like that. Right? There'll be a huge price jump, right? So that's usually the presence of an institution. So what we look out for is this imbalance. Okay, so let me just show you the structure. Very simple. You would have seen charts where, okay, a normal price action is where this is the first candlestick. Observe the high and low of the first candlestick. Okay, this is the low, this is the high. Let's say the next candlestick is the next one over here. Okay, this is the next candlestick. That's the high, that's the low. Okay. And let's see the next candlestick is like this. This is regular price action. Okay. There's no gap in between or anything. Like if you look at the first high of this candlestick, the low of this candlestick, there's no gap or anything. I'll show you one more case where let's say this is the first candlestick and the second candlestick suddenly has a big candle, right? Suddenly has a big candlestick like this. Okay. Cool. And let's mark the high of the first candlestick over here. And the third candlestick, let's just mark it like this. Okay. This is the low of the third candlestick. Good. If you look at the difference between the first and the second, in the first case, this is the first high, third candlestick are low is over here. Okay. There's this candlestick is completely inside it. But in this case, this is the high of the first candlestick, low of the third candlestick is here. In between these two, there is this candlestick body or a gap between this candlestick body. Okay. There's this gap or this candlestick body is coming in between. This is a sign of inefficiency. Okay, irregular price filling, inefficiency or improper price action. What I mean by this is that in the first case, inefficiency. I'll just call it inefficiency. In the first case, it's very tight candlesticks because the number of buyers and number of sellers are kind of equal, right? The selling pressure and buying pressure, there is a pretty good, like slightly higher on the buying side, slightly lower on the selling side. It's pretty good price action, good amount of buying, good amount of selling. Here, if this imbalance or inefficiency, this is a sign that this happens only when there is a big buying activity and selling activity is lower. Less selling, but big buying activities. That's what causes this imbalance or inefficiency. This is called as an imbalance, inefficiency, or in other words, we call it fair value gap. Okay. Uh, I'll just type it down on text. Fair value gaps or imbalances. Okay. Or inefficiency. Okay. So I'll just give it in writing also so that the steps are clear. Okay. The high of the first candlestick, and the low of the third candlestick. If there's a gap in between, body in between, it's a sign of inefficiency and is called as an FVG, fair value gap, or imbalance. Okay. That's an example of imbalance. So if you look at the chart, let's start with the 30 minutes time frame, for example. Let's just go somewhere or the other. Okay, so you can see all you have to look out for these big green candlesticks. That's what we want. Big green or red candlestick. In this green candlestick, you can see this is the high of the first candlestick. Third candlestick's low is here. So in between them, clearly an imbalance exists. Inefficiency exists. Okay, that's an imbalance. Okay. This is a sign of imbalance or inefficiency. Let's first identify imbalances properly. Let's get used to our eyes seeing that. And then we'll look into demand and supply. Okay, so in this case also here, when you see a red candlestick also, this is the, let's say, the low of the first candlestick, exact opposite. The third candlestick's high is around here. In between these two, is there an inefficiency or imbalance? Yes, there is. Right? That's also an FVG gap or an imbalance over there. Let's move forward. Let's see some random stock. Like you can even see it on a 4-hour time frame. Like every time frame will have this. Like let's see if there is. So this is all of these are imbalances, right? You can see this was the low of the first candlestick. Even your gaps, right? Gaps are also called as an imbalance or inefficiency. Even your gap that happens on the chart, gap up and gap down, that is also because of inefficiency, right? So you can see the high is over here. This is entirely an FVG. From here till here, full FVG, fair value gap, right? So let's identify more, then we'll get into practically how to use this for our trades. Okay. Another FVG on this side, right? This is the low of the first candlestick, high of the third candlestick. In between, there is a red candlestick body. This is the inefficiency zone or imbalance. Okay. Yeah, so same here also the same thing. You can see this is the high of the first candlestick, low of the third candlestick. In between them, there is an inefficiency. Okay, there is an inefficiency over there. Awesome. inefficiency. Cool. So hope you guys are able to see it here or now. It's a three candlestick pattern, right? For the upside, the first one would be a high. Just look out for candlesticks with big body. Okay. This is usually a sign of imbalance. And it's the low. And in between those high and low, if there is a good imbalance like this, we can call that as a this thing. And these are examples of regular price action, as you can see. Like here, the high is over here, right? Third candlestick low is here. In between, there's no body or anything. That's a regular price action. So when institutions are actually buying or selling a stock, when there's a big demand or big jump in price like this, right? That creates an inefficiency. You can see different inefficiencies. Right? So inefficiencies are an example of institutional footprint. It shows that institutions are taking action on the stock at those price levels. Okay, nice. So how do we use this? How is this relevant for us? And what are the simple setups we can trade based on this? So as we mentioned, we're going to mark the demand and supply zones. Okay, so the logic behind this kind of trades is that the logic is that if the institution pumped up the price at this point, okay, they pumped up the price at this point. That doesn't mean so if they're pumping up the price pretty well, uh, institutions where they trade, they're trading with hundreds of crores, right? So this pump, they would not have used their entire money. They would still want to keep entering this price. Every time the price comes to this price, right? They will keep wanting to buy more and more. Every time it comes back, they want to buy more and more the next time as well. Right? So it's more like instead of putting all their money at once, they'll put one money, cause a push price up, and then when it comes back again, they'll put more and more money so that they can get better price points as the result. Right? So that's the objective. Now, how do we so this is why we call this area as a demand zone. Okay, demand zone meaning if you see a big candlestick like this, right? This means that there has been a strong demand from the institutions. So we call this area as a demand zone. If the price comes back to the demand zone again, they will try to push the price again one more time. That's a demand zone. It is pending orders, yes. So they executed this many orders earlier. Now they want to execute the rest of it when it comes back to this point, right? So it is a form of pending orders as well, right? So this is what your demand zone and supply zone are. To market is very simple. Like we just have to know the concept, but to utilize this is very simple. It's very similar to order blocks. If you guys have heard of it, order blocks has a little more what do you say, filtration process. But demand and supply is very straightforward. Okay, all you have to do is in case of green FVGs, like if the price is going upwards, FVGs, right? The last red candlestick before the up move is the demand zone. Okay, what I mean by this is that let's have a look at where we would be find wherever we find an FVG. Okay, like for example in this case, right? This is the high of the first candlestick. This is the low of the third candlestick. Between this is the FVG zone, fair value gap, or your imbalance. Okay. Look to the bottom. The last red candlestick, the high and low of it, mark it like this. This is your demand zone. Okay. This is your demand zone. Cool. So as you can see, price went up, came back into the demand, touched the demand, price went back up. Okay. Now, usually people will have the idea that so now their trading idea setup is that, okay, every time it comes to a demand, they'll start buying it. That doesn't work either. Okay. A demand zone does not have to work all the time. A demand zone is just a good trade location. I keep mentioning the word trade location all the time. It's because trade locations are those areas where high probability trades can happen. So what I want is that I don't take an entry just because it touched the demand zone, I don't enter the trade. Okay. I want more confirmation. That is, if I have an inside candlestick pattern formation or any chart pattern formation or some kind of a trading setup that we have learned, any candlestick pattern or any trading setup that we have learned so far from the demand zone. Preferably, I usually prefer trading ranges, right? If I find a trading range at the area of a demand, When that trading range breaks out, it gives pretty good results. Okay, that's what I prefer. But again, you can trade with either say indicators, also moving average crossovers, or even say your super trend or candlestick patterns, anything that we discussed, right? So I generally prefer having an inside candlestick over there. That's what I would recommend for you guys also. Idea is simple. Once it comes into a demand, if there's an inside candlestick pattern formation, if there's a breakout, buy that stock. Okay. I'll show you one more example here. Okay. The supply zone here also you can see a supply as well. Supply meaning this is the red candlestick. These are the you can see there's a clearly an imbalance. In supply zone, it's the exact opposite. Okay. I'll just type this down here. In case of red FPGs, the last green candlestick before the up move, before the down move is your supply zone. Okay. So in this scenario, you can see here your supply zone is actually here. This last green candlestick, just mark that out from top to bottom. This is your supply zone. Okay. This is your supply zone. And as you can see here, from the supply zone, it did create one trading range and everything, but it did not like if you want to trade on the supply, we want it to come down from there. If it starts crashing from here or gives a breakout here, then we can short sell it. In this scenario, the supply failed. Clearly, the supply got taken out, prices above the supply zone. This supply failed. You can remove this from the chart now. Okay. If the supply fails like this, like if it crosses the supply zone, you can just remove it from the chart because it's no longer a valid supply. There was a supply earlier, but if it had crossed this to the downside, that would have been a supply trade breakout. But here in this case, it invalidated the supply also further moved up. Okay, let's see more cases. Same will be for Nifty and Bank Nifty. Yes, in Nifty and Bank Nifty also you'll find the same demand and supply. Demand and supply is kind of harder to find on Nifty because a lot of times it will got taken out, but you will find the same thing over there as well. Let's have a look. If you want to look it on a say a 30 minutes time frame, this is for intraday. So if you're doing intraday, stick to 30 minutes order blocks, sorry, 30 minutes FED zones. You can see this is the demand zone if you want to put it out. Prices, there's no other demand or supply nearby, right? Everything is regular price action. There's no other demand zone as of now. We'll have to wait. So that's why I like stocks a little more because stocks we have different, so many options. Like every day we can find different demand zones, taps and everything. But the other ones, it's a little harder. Indices, it's more of a patience game over there. Okay. Anyway, moving forward. So now if I just let's take I'll just mark demand and supply for random examples and then we'll move forward. Okay, so this is Hindalco. Okay, Hindalco, as you can see, there is a big candlestick in between. This is for intraday. I'm on 30 minutes time frame. Okay, there's an FVG over there. So I can say that this last red candlestick, this one over here, this is my demand zone. Okay, this entire thing is my demand zone. The stock is in a demand right now, but we don't trade it right away. Okay, we don't trade demand right away. We trade it only when, let's say, tomorrow there's an inside candlestick formation, or we know candlestick patterns already. This is an example of that wick-based candlestick patterns, right? Where at the bottom there's a doji. So if a green candlestick comes and crosses above this high, above 672, that's a momentum switch plus a candlestick pattern breakout. Right. So if the price goes above 672 also, I can buy the stock. Okay. This is how you trade demand and supply zones. Demand and supply zones are trade locations from which there may or may not be a move up. So at the point of demand or supply, find if there is some trade setup that's coming up. If it's coming up, take that trade in that direction. Okay. That's your demand zone simple trades. Uh, so let's just again, we'll just go through a couple stocks, see what is the demand and supply for each of them, the current demand and supply. Okay. So you can see this is TCS, big green candlestick over here. This would be the demand zone, last red candlestick before the up move. Okay. Is there any nearby supply? No, price action is pretty good. No nearby supply. Apollo Hospital also similar demand zone over here. No nearby supply, good price action, so nothing there. State Bank of India.
Out. So there should be three candlesticks, right? For three green candlesticks for to mark the FEG.
It doesn't have to be green. The color doesn't matter actually. The first one
Okay,
could be red also.
okay,
And it's just the that big green candlestick should be there. That's all.
fine, fine. Okay.
All right. Uh, cool. Even in State Bank of India, it's a big demand zone. This entire thing is a demand zone. Slightly like again, this is slightly riskier because we prefer demand zones to be smaller. Uh, but yeah, even if you get some proper price action, maybe some inside candlestick here and price movement upwards, we can still try to trade on that. Okay, cool. Now I'll give you some simple trade setup. This is the first setup for demand and supply. I'll just give it in writing. Okay, demand setup. Step one, find the imbalance on the chart. Two, information or candlestick formation or momentum switch, etc. Any trading setup from the demand or supply zone. Therefore, enter your enter your trade with your stop loss as per your trading setup. With like whichever trading setup you're opting for, if it's inside candlestick pattern, let that the stop loss of your inside candlestick pattern could be the exact same setups. Only one difference is coming in. Instead of trading ICs everywhere, we are trying to trade ICs which are in a demand zone already. Right? That's the key difference for these setups. It's simple to follow along. You can just create like let's say if you have like for example if you have a Wipro demand zone here, you can just set an alert on this price range and you'll get a notification when the price comes into your demand zone. Right? So at that point, you can basically execute your orders and it should be comfortable there. Okay, cool. Right. So this is the first thing that I want to tell you guys about demand supply zone. Now I'll give you a pre-open market setup also, something very simple to execute and very efficient. Again, the hit rate is kind of slower in this, but the objective is this, right? You see Wipro. Let's go to this section. Okay, let's go to 5 minutes, 3 minutes. Okay, so check out what happened on Wipro on this particular day. Okay, this is let's see if we can go to 1 minute also to show the price clearer. All right. Okay, so Wipro on this particular day, during pre-open, right? Like imagine what happened in the first second of the market. In the first second of the market, Wipro was already up because of pre-open market pressure. It was already up till that point, which is pretty big. Okay, like if you see the measure the distance between this, right? It's around 0.85 or 0.88% up in the first day itself. Like in the first second of the market itself, it was around 0.88% up. Okay. So once this price moved uh, down, just 1 second, guys. All right. So as I was mentioning, in the first second itself, notice something. It just suddenly came back down. Okay. Within 1 minute of time, it had a crash of almost 1%. Right. So in intraday, we're usually waiting close to 15 minutes or 30 minutes or even more to make this kind of, say, 1% move, right? That's a pretty big move. In the first minute of the market itself, it just opened here, came back down, guess what? Into a point of demand. This kind of consolidation, right? These are like base structures. There's also a point of demand zone itself, right? This is like a demand zone. Okay. So usually all we have to do is just create a limit order here. Once the market opens itself, just create a limit order here at slightly above this price point. Whatever is your demand zone, just a little bit above the demand zone, you'll create an order here, like 292 or something over there. Okay. And as you can see, within minutes, this is usually a hunt that happens in uh, most morning market drives. It'll start at a high point, come back, immediately touch the demand zone, and then have a big push up again after that. Right. So within minutes itself, you'll be in big profits of like, where is that chart? Okay, I can't find that chart, but more examples. Okay, you can see Wipro here also. Right, same thing. This was the demand zone on the previous day. On 29th, it opened over here. Within the first 5 minutes itself, it came down, took that demand. Your order would have got filled over here, and within the next 5 to 10 minutes itself, let's say your entry would be around here. Yeah, within next 5 to 10 minutes itself, you're already up by 1%. Like the whole, instead of waiting for 1 to 2 hours of time, within 5 to 10 minutes itself, you'll get the movement that you want, and you can exit out of it. Right? This is the second application of demand zones where we can use where we look at the pre-open market. I'll show the entire filtering process from pre-open market soon. But the idea is very simple. The idea is there will be this market here. Okay, there will be stocks which have consolidated like this, a good consolidation or a good demand zone, or even FVGs also. Just take FVGs wherever is the last demand zone. Okay, mark the demand zone, either a base or an FVG zone. Mark that zone, and the next thing that we see is that when the market opens in the pre-open market, we have to figure out which all stocks are opening at a high price. Okay, some stocks might be at 1%, some stocks might be at 0.5% and everything. Big gap up opening. Okay, a big gap up opening. If you find that big gap up opening, put your limit order on those stocks into those demands. Okay, your limit order would be on those stocks into those demands. Once the price, just keep that limit order and just wait for the price to execute. Right. So most often, uh, let's say if you're shortlisting four stocks, two, usually one or two out of four stocks, it's usually a 50% chance. Not all stocks will come down back to the demand zone, but some stocks will do. And those stocks will give you an instant returns of say 5% and 4% within just a couple of minutes of time. Right. So I'll show you the process now. The logic is this: find a good demand or base structure. Next day, if the gap up, if the price opens with a very good gap up, set up a limit order or set up an order automatic order over here. That is, if it comes down and touches this price, you will automatically enter. That's what you want. Okay, let's see the let me show you pre-open market and all these examples. So to check the pre-open market, we'll go to nscindia.com. Sagility Anchor Investors 52. It's on the borderline actually. I was looking at that stock. Like we usually need 50 plus, but it should work. Like usually, even if you make loss in the IPO short strategy, it's usually might max of minus what minus 0.5 or minus 1% and everything. Not a big loss. So if you're exiting by 9:45, the loss, even if you make a loss, will be small itself. So yes, you can go for it. I think next week there is Sagility. Swiggy is also coming upon. Sagility is on 9th, I think. Swiggy is on 10th. Uh, Pretty good stock. On 11th also there is one more. I don't remember which it is.
I think
But yeah, I think there are four IPOs which are giving some main board IPOs which are giving uh, IPO lock-in expiry this week.
Swiggy 11th, I think.
Swiggy is 11th? Okay. I think I have a list. I'll put it on the
ACME,
group later.
Eva Bopa, lot of, I mean, four stocks are coming next week.
Yeah, I saw that. I think I have a list with me also. I'll just share it in the group for you guys.
Yeah, helps.
Uh, what The order should be after pre-open 7 minutes, right? No. So you can, there's a way, if you want to trade the pre-open entry itself, that's at 9:07. You know what? Let me just explain pre-open quickly. Then we can have it. So what is pre-open market? Pre-open market is from, as I mentioned, it's from 9 o'clock to 9:15. Okay. But technically from 9 o'clock, 9 a.m. to 9:08 is the order window. Okay. This is the order window. Within this time, you can enter your stocks and everything. You can buy and sell stocks over here. So you'll have to sell. So you cannot, do not use market orders. They won't get executed. Market orders don't work in pre-open market. Only you can only use limit orders. Okay. Uh, so what you can do is, like in the pre-open at 9 o'clock itself, if you come into this tab, market data, pre-open market. If you come into this tab, okay, and if you come into this tab, you'll find a lot of this thing. This price will keep changing. The first, you can see from 9 o'clock, the price kept changing for Nifty also, right? By 9:05 is usually 9:05, 9:06. That's when the price stabilizes. Okay. Price stabilizes usually by 9:05 or 9:06. Okay. 9:05 or 9:06. Let's just say 9:06. Right. So you have 2 minutes order window to actually short your stock. Okay. So what you have to do is by 9:05 or 9:06, this IEP price that you see here, okay, indicative equilibrium price, IEP price. This is what is important for us. Okay. Check the IEP price. Check the IEP, indicative equilibrium price. Check that price at 9:06 a.m. Okay, for the stock that you want to short. Okay. So let's say trend, right? Or Cipla, for example. Cipla IEP price was 1513.25. Okay, so if you look at Cipla, this is on Friday's market. This Friday. Okay, so this is Friday morning on Cipla. Okay, cool. Cool. You can see the IEP opening price of Cipla was 1502, slightly above that, 1502.70. In other words, uh, it's showing 1513, a little higher. 1513, that's way higher. Yes. I'm not sure why this is showing different price right now. We'll take a different example maybe. I'm not sure. Okay, we'll check ITC. Okay. So if you look at ITC opening price, it's around 470 as you can see here. Okay. You can see the 470 mark. It's around there. Cool. This is also a demand tab that you saw. It was a base formation, right? It did a small demand tab and then went back up in the small minute of time. So what this IEP tells you is that by the time market opens at 9:15, what is going to be the market price? That is going to be IEP price. Okay, so at 9:06 itself, for example, if you, let's say we're talking about IPO short, okay, IPO short strategy. We're doing, say, Sagility on Monday, right? If you're doing Sagility, check at 9:06, check IEP price at, okay, IEP at 9:06, whatever that price is, right? Whatever that price is, you will use a market at 9:06, you will use a limit order at IEP price. Okay, if it's, let's say the IEP price is 500 for Sagility, right? You will keep 500 or little less, like so that the chances are more for you to get executed, like 499.50. Sorry, since you're shorting Sagility, right? Uh, this usually confuses people, but if you're shorting Sagility, let's say IEP price is 100. Okay, so we will just short, the limit order would be at say 100.5, so that we have a higher chance that our order will get executed. Okay. it's more easier for higher prices to get executed, right? So limit order would be at 105, 100.50. Uh, and then by 9:08, order will get filled. Order gets filled. And 9:15, you will be at the top. You will you will start at the top of the market. Okay. This is it. So this is how you can trade on pre-open. The applications of this, there are different styles of them. This is actually very high risk style of trading, because within 5 minutes itself, you either make big money or you can lose money also, right? So that's why it's a little bit of high risk. The strategies that you apply here based on um, different things like levels and all these things. Like, I don't want to get into pre-open strategies right now, but I'll just give you a simple gist of it. And what I want you guys to follow is the demand zone example, not this one. Okay, so uh, for example, okay, at for example, let's say there is a resistance zone. Okay, I'm giving you a pre-open strategy. It is highly risky, as I mentioned. I don't want you guys to follow this, but if there are someone who wants to take some risk in the market, and if you want to practice these strategies, I'm just giving you pre-open market strategy. I'm just giving you one example for now. Cool. One of the pre-open market strategy is that, let's say there is a either a demand zone or a levels support level. Okay, let's say this is a resistance level, either a resistance level or resistance meaning your swing high level, right? We marked it on swing high level as part of levels trading. Either that, let's call this as a zone. Okay, either that or a supply zone. Okay, either that or a supply zone. If it's a supply zone or a resistance level like this, if the price IEP price, right, at 906, okay, uh, if the IEP price of a stock at 906, okay, is inside a supply or a resistance zone, short that stock. Okay, short that stock. Similarly, if the IEP price, read this, the IEP price of a stock at 9:06 a.m. is inside a demand or a support zone, buy that stock. Okay. So more often, when you look at this price, right? Let's say trend ka chart was this or something, and this is the resistance zone. Okay. This is the resistance zone of trend. If the price of this stock at IEP price, let's say this trend is at say 7060. Okay, let's say this last zone is 7060. Trend ka IEP was 7050. That is, it was about to start from 7050. Okay. If this is the case, if it's inside a demand or supply zone like this, short that stock in pre-open itself. This stock tends to crash, goes to the next demand zone. Like, this is two concepts colliding with each other. Like earlier we said demand zone is here, right? So usually it'll start from there, come into a demand zone, then jump up from a demand zone. So our trade would be short from here until the demand zone. Okay. So things like this. Short term, you just have to hold the stock for maybe 15 minutes of time or something. You don't have to short for too long. Within 15 minutes to 30 minutes of time, you will be out of the trade. Works in index. Index does not have the proper IEP price. I think uh, technically, yeah, it does work in index also. Like, this is the pre-open market index price of Nifty over here. Same concepts actually work in index also, but I never tried it because that's option buying, right? Imagine a 1% move in option buying in just 5 minutes of time. That'll just either give you huge returns or just wipe out your entire capital. So that's why I never tried option buying so far. Uh, but it should technically, from a theory point of view, it should work on indices also. I'm not comfortable with the risk. That's why I haven't tried myself. Price for entry, shorting, and buying. In these examples, the IEP price would be the price at which, if you're doing pre-open market strategy that I mentioned, where if it's inside a supply or resistance zone, short or go long. If you're going with this strategy, the IEP price is going to be your entry price. Okay, your limit order at IEP price. IEP or slightly IEP or slightly above or below IEP price. Okay, this is a pre-open strategy. Very effective. You can just give it a try tomorrow also if you want. Just start with one quantity so that you get confidence on the setup. But yeah, one condition is that you have to be looking at the market from 9 o'clock onwards. From 9 till 9:08, pre-open market, focus on that. Till 9:30, 9:45, you have to look at the demand zone tab or the supply zone tab. So uh, yeah, like you should be able to finish from 9 o'clock to 10 o'clock itself. You could be done with your trading. But yeah, this is the pre-open market strategies for that. All right, let me put in the next set of strategy also. That is demand zone tap. Okay, so did I give it in writing? No, right? Okay. Demand zone tab, what you do is in the in the IP price, right? For example, on Cipla, it moved up by 1%. Find the stocks which had big movements in pre-open itself, right? Find stock which has big movement. Like I think ITC was also one of the big movement stock, right? Like top 5 stocks or top 10 stocks. Big movements to the upside, that's for your demand zone tap. If you want to check supply zone tap, exact opposite. That's your, supply zone tap. Wait, I'll just show everything in order. For example, ITC was a stock which had 0.53% up in the market order. Okay. Let's say you're not doing pre-open. You're not doing pre-open. In that case, you can see it opened over here. Okay, ITC opened over here. Let's go back to this day. Okay, when ITC opens here itself, by the time ITC opens itself, you can put a limit order. Okay, you can put a limit order for this stock at say 468 or within this range. I would say 469. Just keep the range at 469. Okay, like this is the range. Let's say we would order something around say 469 or somewhere around here. You can just put a buy order. Okay, and it's a buy limit order at 9:15 a.m. Just place it, and if it taps, you can see it went tapped, and within the next, within let's say by 9:45 itself, right? This is the first candlestick, 9:20, 9:30, 9:35. Yeah, around 9:40, 9:45. This was the return. So you got around 1.25%, which is around 6% returns within 6.25% returns within a span of just 15 to 30 minutes, right? So, yeah, that's the demand zone tap example. Let's go for some more examples here. Again, pre-open market, just check the top 3, 4, 5 stocks like Asian Paint. Let's see Asian Paints if it worked out for demand zone tap. There is Asian Paint for starting. This is 5th, right? This is 6th, sorry. Okay, so Asian Paints, this is the exact opposite example. Okay, remember our supply zone tab? This is a supply zone. You can see this big FVG gaps over here. Okay, oh, it's on a 15-minute, right? Sorry, wait. Let's have a look in 30 minutes also. Right, again, this is all a supply zone. Uh, Not a proper one. Anyway, I mean, 5 minute supply still works. I'm just contemplating. But yeah, this is one of those examples where it's not clean actually. I don't want to take this much. But yeah, this is one of those examples where it's a supply zone tap, then starts crashing. Um, we can't take our this is not the demand zone tap example because we don't have a nearby demand as such. Right? This stock does not have a nearby demand, so we don't have to look at this stock. Look out for stocks which has a good demand zone or a supply zone. Okay, that's the condition. Let's have a look at Cipla also. All right, Cipla, this is on a 30 minutes time frame. As you can see, Cipla was in a supply zone, right? Pretty clear, pretty evident. And on 6th, as you can see, the IEP price was inside the supply zone, right? It was inside the supply zone, and as a result, it just crashed right from the market open, right? So Cipla was the pre-market trading strategy that we talked about. Uh, Decent, just decent. Cool. I think that's it. Can you explain this setup with chart example? Can you explain the setup with chart example? Okay. Uh, right. If you're looking at demand zone tap, what we need is in the pre-open market, find the stocks which have been moving up. Right. Let's say DR ready, for example. Okay. At 9:15 a.m. At 9:15. So whichever stock we're selecting, it has to have a demand zone or supply zone as well. Right. So this was on Uh, again, this stock also does not have a proper demand on 30 minutes. So this is not for our setup. Right? Ideally, if we had a demand zone, it goes to a demand zone there. Is it there on 5 minutes? Not quite. Let me just find one more stock. Let's check TechChem. Oh, nice. So TechChem actually came into this last demand. We are considering this entire order block then. Again, that's a different type of demand zone. We'll talk about this later on in the SMC sessions. That's not a proper. For now, I mean, for our logic, our demand zone should have been here. There was no tap. Damn. No example here also. Let's have a look at the downside direction too. HDFC Bank. Okay. HDFC Bank came into this demand over here. It jumped up. Uh, Still would have worked, but it's not the immediate tap to demand. It eventually came into the demand and went back up. But yeah, it's okay. Cool. I'll just give you the steps here. Find step one and stocks, which gave good move in the open market. Step two, mark the demand or supply for stock. Set an order at the demand or supply zone. Okay. Therefore, exit with the 1% mark. Find the 1% mark. These are generally the criteria for it. Okay. Is it good only to go with Nifty 50 or can we consider more? We can consider more, but as we go away from Nifty 50, it tends to get more and more volatile. That's why I would recommend stick to Nifty 50. I mean, Nifty 100 also is still fine, but Nifty 500 and everything, it becomes very hectic. Some of the stocks does not have good volume also. That's the problem. Okay. Cool, guys. I think I've covered pretty much everything that I wanted to for today's session. Let's just do a quick recap. Yeah, the agenda was levels trading, demand and supply zone, and pre-open market. Right. So levels trading, as I mentioned, continue with your trading setups like inside candlesticks and all these things itself. Only thing that you have to keep in mind now is that a third step came in. First step that we learned was momentum. Second step, trading setup. Now the third step is your levels. That is your target levels. If your target has a good gap, let's say this is the downside target. If the target has a good gap from your trading range, then that's a good stock to select. If the target is very small, uh, it's ideally we should not select those stocks, right? So out of the 10 or 20 different setups that comes every day, we shortlist only two or three, which has a good gap for it to run up or down. Okay, that's the first thing that we learned from levels trading. And in demand and supply zones, what we learned is that because of this FVGs and fair value gaps, the last red candlestick, if there's a last red candlestick before your FVG, this is your demand zone, right? If the price comes into a point of demand, and if it starts forming an inside candlestick or a trading range or any setup that we have learned so far, trade in the direction of demand. If it goes up, trade along with that. Right? These also tends to work out pretty well. That's our demand and supply zone normal examples. We also talked about a 915 setup. That is, at 915 itself, if there is a stock which has consolidated like this, formed a base towards the market end, or if it started forming an FVG also towards the market end, right? Those stocks usually after it gives a gap up opening, it will come down into this demand within a couple of minutes time. It'll just do a quick demand run and then go back up, right? This is something that we could expect. So that's the second setup for pre-open market that we have to look at, right? Awesome. I think that is it. We also learned about pre-open direct setup also, which is if the stock is inside a demand or supply zone at the IEP price, short or go long on that. Just check these out. The main take back from today's session I want you guys to think about is your normal inside trading ranges itself. Like in your if your trading range has the target is very far away, don't take that. Like our simplest setup is the inside candlestick trading range, right? Only difference that we're making to it is that a filtration mechanism based on the target. If the target is far away, take those trades. Those are better. Cool. Demand and supply are a different setup altogether. You guys can check it out as a just test the waters with one quantity, two quantities, or anything. Just more setups for you to learn. But again, the core strategy doesn't change as of now. It's IC plus ST. Next week, we'll be introduced to VWAP, where we'll combine demand setups and all these things on top of it. Okay. Cool. Awesome, guys. Any questions you guys want to take up, or shall we close? The last week notes, I think it's uploaded on the Academy already. If not, I'll just do that. Tomorrow's session is, I think, at 7 p.m. I think it's by Akash. I'll ask him to update on the group also. Not sure what the session timing is. Only today's session was at 4. Rest of the sessions will either be at 7 p.m. or 8 p.m. itself. Will you share this video today? I'll try to share by 10 to 12. Yeah, I can upload by late in the night. Yes, I can do that. Yeah. Cool, guys. I guess that's it for today's session then. I'll close the session for now. If you guys have any doubts, do let me know. Send me a text on WhatsApp, or give me a voice note. Try to implement these strategies one by one. If you feel there is too many at the same time, just pick one or two that you want to execute right now. Right? Pick maybe a demand zone or even maybe some pre-open market also. Just pick one or two. Test it out with a few quantities for this week. Okay. Cool, guys. That's it for today's session then. I'll close the session for now. I'll see you guys later. Right. Thank you for your time. Take care. We have book like Trading in the Zone. Where is the location? You will find educational resources section in the Academy app. Under that, you'll find trading books. You'll find Trading in the Zone on that. Yeah. All right, guys. Thank you. Thank you for your time. I'll close the session for now. Take care. Bye.